Hi traders, Adam Ryan here with Optic Trading, and welcome to today's market recap where we'll be covering crude oil. Today's date is April 23rd, 2018. Now before we get into the recap of today and what happened, we want to touch on what was the prep work, what was I thinking going into the open, and then we'll get to the actual recap. So first off, we have our long-term charts up that you're looking at. To the top left-hand corner of the screen, we have the monthly time frame. Below that, we have the weekly, and to the right, we have the daily. So we look at these long-term charts to help us get a little better context and the trend of the market. So as we see, monthly trend is up, weekly trend is up, coming into a resistance area here, and daily we've just broken out of a consolidated range here, balance area, and we're moving higher. So all time frames are moving higher. Next, we're going to drill down to our 5-minute chart. And I'm going to point out a couple of things for you guys over here. So just ignore these support and resistance zones. I have a bunch of them on my chart. They're color-coded based on what type of support or resistance zone it is. It can get a little bit messy if you don't know what you're looking at. So just try to ignore that, and I will highlight some stuff here to make it easier for you guys to see. So this right in here is the day that we broke out of the daily time frame balance area. So after we broke out on this day, I would expect that we would have seen continuation, but instead we formed another balance area. So we formed a balance area right in this area here. And that's usually not what you want to see when you're breaking out. For a clean break, you want to see it break and just run. Now, it doesn't mean that we're going to fail right away, or we could fail in the future, or we could just keep continuing because all trends are up. It's just something you want to monitor. So when we're trading in a balance area, one thing to note is that the extremes are where the real opportunity lies in the balance area. You're going to either expect to look above and below or fail, look above and below and accelerate, or we may just stay within balance. So you've seen at this day right here, we tried to look below the balance area. We snapped back in and failed. When you see something like this, the expectation is to rotate to the balance area high. And if you don't see that happening, then that's showing weakness to the side that should be rotating. In this instance, we actually had a major gap up to the other side of balance. So we gapped out of this consolidated range balance area and we held it, and then we had a strong close following that day off. So the next day, which was Thursday, we gapped up, sold off. We tried to take out the high. We had some absorption coming at this high, pulled back, tried to test it again, and buyers actually exhausted. And then this swing down here was the largest down volume of the day, and prices actually moved into the previous day's range. So when I seen this paired with this balance area after the breakout, I started thinking, okay, maybe these buyers aren't as strong as I thought. And I was thinking going into Friday's session that it was looking bearish. Where I had to change my mind was when we pushed down and I seen buyers come in here absorbing price and actually aggressively buying and pushing price up. And throughout the day, there was other signs of absorption on the buy side as well. Just not letting the sellers really control the market or push anything down. So this right here is today. And on Friday, what I was thinking before going into the day, that hey, we might possibly gap higher and trend. We might see us test this level up in here and move higher, and I wasn't expecting a gap down. And this gap down is very interesting, and this is what I really want to talk about today. So going into today, I was already bullish. I was thinking today was going to be a bullish day. And when I seen overnight, there was a pre-market manipulation. Now this is something I talk about in another video. I think it's next week. I have it scheduled to be released, but we're going to talk about the different manipulation tactics that institutions and hedge funds use, and today was one of them. This is pre-market manipulation, and what they do is when these guys want to buy, they don't just want to buy at any price. They want to get the best price possible, so they want to make the market look weak. So they'll intentionally start selling before the open to push us down so we get a gap, because this looks bearish. Look where we open. Look where we closed, on Friday, way up here, but we're gapping way down here. Oh, that's so bearish, right? Everyone's going to be thinking, oh, this is a great time to short, pull into the previous day's range, short. Normally, this would be a good short, if you didn't understand what was happening. So let's pull up the 24-hour chart so I can point it out to you guys. Right here we have the 24-hour chart. So you see that we're trading, this was the previous day's range in here. We're trading within range. This is the previous day, not doing much. And then all of a sudden right here, we just get massive volume that just slams out. It comes out of nowhere. We're way high. We're not breaking out or anything. This huge volume's coming out of nowhere. And the important thing to see here, I'm going to bring out the volume profile chart as well. This is the bar here. So we had thin volume. So this chart is basically showing me where every price, where all the volume transacted at each price. So now I can see what the level, what in each particular price is trading at, and that gives us a lot of value. So we see that really thin. We break out and then it gets so thick. It gets so thick and price pops up. Then it tries to take down the low, pops up again. Then it tries to come down again, thick volume, and we move higher. So what this is absorption. So this is a manipulation tactic that the institutions and the hedge funds use. They intentionally push price down so it looks weak. We open lower, and then they just start buying, absorbing all the price. And if we look on this chart, we can see exactly what happened. It pushes lower. This is where they're absorbing, pops up, tries to take it down, snaps back, comes in here. This is where the large volume was building as well, and then we move higher for the remainder of the day, and we actually have a strong close. We have a spike high on the close. So this is the type of day that can really fool a lot of new traders because they're seeing a huge gap down. They think it's bearish, but it's actually manipulation happening, and they're trying to make it appear weak so they can buy. And this was a pretty much trend day for the remainder of the day. Now, going forward into tomorrow's session, whenever you see a spike high into the close, this is a really good indication of what might happen on the next day. If we gap higher, that's generally a bullish signal. If we gap lower, that's generally bearish. So think about all the traders who are buying in here. If we gap lower, then they're immediately underwater. So they're going to be crying uncle. They're going to be hitting stops. And you can actually see a pretty big liquidation happen on these types of days. If we gap higher, then it's usually bullish. We may see a pullback into this high, which would be a good area to buy and go higher. So there's a couple scenarios going forward with the days to come. I also don't want you guys to get so into one bias. So, oh, this has got to be long, or oh, we got to be short. Let the market dictate how you trade and listen to the market and react to it. I hope you guys enjoyed this market recap video. If you did, be sure to give me the thumbs up and subscribe. That lets me know that you enjoy these videos and you want them to keep coming. Best of luck with your trading, guys, and I'll see you in the next video.